What is going on with this market here? Are we in wait and see mode here? Doesn't it kind of feel like we're ready to do something really bad or really good?
You know, and we got to say the market is a crazy thing to watch, and who knows what it's going to do tomorrow, next week, or so forth. And that's why you kind of break it down and say the market is a stock market or a market of stocks. You can pull out some good companies that have done strange things that are great buys, but the market itself may not be a great buy. And we got to realize we're at the start of the summer. Economic news. There's some good things, but it's all good. The market is kind of high, around 17 plus times earnings, so it's not a great time to just jump in with both feet. You've got to kind of dice out and find certain good values in that market.
So when you're looking for good values in a broad market, are you looking at sectors, or are you looking at individual stocks, or are you kind of sitting back and seeing what numbers look the best to you and who's in the least amount of debt?
That's what we do, is because the stock market is thousands of stocks, and which is just small pieces of large companies. So we want to find those companies that maybe have gone through their correction already before the market has. And I won't tell you what it is yet. We're going to save it for next week because I'm still in the middle of my research. I don't want to say something and find out I'm wrong on it. But there's a great company that in the last week or so, for the past year, is down 50%, but their sales are increasing, no debt, a lot of cash on the balance sheet. So a great company. I just want to make sure, I'll do some reading this weekend before I talk about, say, yes, here's a great company that I'll share with you next week. That's what I'm looking for, a company that's already gone through its correction before the market has.
So here's my question for you, though. So you got Johnny Lunchbucket, who doesn't have a money manager. First mistake, because I mean, and I think a lot of people think that they've got to have millions and millions of dollars to have an investment manager. That's not the case, right? For the guy that hasn't taken that step yet, what things should he be looking at, or she be looking at right now, when they're looking at an entry point or an exit point into a stock or a market or a mutual fund or an exchange traded fund?
Well, they have to understand the stock is not a gambling chip. If that's what you're going to do, you're probably going to lose money. Look at it, again, as a small piece of large business. By the way, The Million Next Door, these books with wealthy people, they all say hire a money manager because they don't have the time or the knowledge to do it. And I've been doing this for 30 years. I still learn things like, wow, didn't think about that. So, but you've got to understand that you're buying a small piece of large company, understand the valuation ratios, what are you paying for the earnings, for the book value, the sales, look at what the balance sheet is. Do they have a lot of debt? Today when I talk about a company that I think could go bankrupt in 2 or 3 years, and people be surprised, like, oh, that could never happen. I think it's going to happen.
So so the interesting part is as you take a look at what's going on here in this market, probably the best thing to do is maybe take a wait and see approach right now, right?
And to let you know, of our portfolio right now, we're holding about $30 to maybe $40 million in cash. Not because I'm trying to time the market, simply because I can't find things to buy at a good value. Now again, this company I'm talking about next week, we may buy that next week. We'll bring down our cash a little bit. So don't be so anxious to buy something. And it's very hard being a money manager. And actually Warren Buffett has said that it's like a baseball game. I mean, you're a money manager and you're being patient, but clients are saying, what's wrong with you? Swing, you bum, buy something. Well, you don't always do that. You don't make money buying all the time.
Yeah, so what's interesting here is here we go. Now that we're going into the second half of the year coming up here pretty soon. I mean, it's June, just a couple of days here. So we almost have, 7 months left in this year. Market's not doing so bad so far. Janet Yellen's yapping about an interest rate increase, which really, in your mind, you don't care either way. And I want to talk about that because the market runs on fear and greed, and it seems like whatever Janet Yellen says, it affects the market. Why don't you care about that?
Because it'll affect the market for that day. And then the next day it's like, well, what you said, it didn't really matter. Because then we come back to, did that business make money? Is that business, losing money? I mean, it comes back to the quality of the earnings and so forth. And you'll have, like today, Greece, because of Greece. We have all these outside factors that move it on a daily basis, but in the long term, the strong companies that you don't overpay for, they will make you money.
I had an email last time you were on, and that person is in their 50s. I don't know how far down the road in their 50s they are, but they've got $100,000 in retirement, and they know that's not going to be enough to retire. Okay, so they asked me, what do I do next? I said, well, call Brent Wilsey, he'll figure it out. But I'm thinking, I'm thinking that it's never too late to start. Right? I mean, because 75 is the new retirement age, right? These days, or 70 years old. A 15-year time horizon or a 20-year time horizon is still significant, is it not?
Oh, definitely. And actually, there's never been a 20-year period that you lost money in the stock market. And that's just saying you didn't do anything, just bought the index.
So do you ever have folks that come into you late in the game and say, oh my God, Brett, I haven't thought about this. What do I do now? Does that ever happen to you?
Actually, we just had a client come in the other day. He was 86, I believe, and his wife was 83. and they were in great shape. And they said, unfortunately, they went to somebody that they had this great guy at Home Investments for years. He retired, they got somebody else, lost half their money.
Oh my goodness.
So now they're still back on the track, but they still understand investing. They go, Brent, we've heard your radio show, we've seen you on TV.
Yeah.
We want you to manage our money. 86 and 83, they could easily live another 10 years.
Sure. So think about that, though. I mean, the fact that we're living longer is a good thing, and it's also a bad thing. We have to have more money, right?
Right.
What do we got going on today? What are you looking at? What's on your
We can talk about many things. I mean, one of my favorite things that's drawn a lot of attention, I kind of brought it up a little bit, was we talk about companies with strong balance sheets. And as you know, a couple weeks ago, Verizon made this big announcement, oh, we're buying AOL and how great this is and so forth.
Yeah, was that such a great thing? Because I suspect that when AOL announces something like that, I mean, AOL has been bailing themselves out ever since they were called America Online, right?
Right. And you remember the Time Warner deal. That was a disaster. So now it's like, oh, is this poison and so forth? Yeah. Well, I don't look at it that way. I say, okay, well, let me look at Verizon because they're buying this company for $4.4 billion. Sure. Can they handle it? Right. I was totally shocked, and that's why I believe in 2 to 3 years we could see Verizon bankrupt. Now, why do I say that?
No kidding.
Yes.
Okay, talk about it. Because let's face it, aren't they going to be a wireless company forever?
Well, that's what we're thinking about. But think about a couple of things. First of all, let's look at the balance sheet. Okay. Well, they pay a 4.4% dividend. Wow, that's fantastic. They use 91% of their earnings to pay that out. Okay, so they got 8%, 9% left there. They have cash in the bank of $4.9 billion. They're going to spend $4.4 billion for AOL. They're probably going to borrow for that. And here's where the big factor comes in. Okay. They have on their balance sheet debt of $113 billion.
Okay, hold that right there because I think that's the biggest part of this. I'm going to keep you over the break here. Sure. I want to talk to you about that because why do you care about debt? Brent's going to tell you about that because I never cared about if a company was in debt before. All I cared about was the water going in the bathtub. I didn't care about the holes in the bottom of the bathtub, and that's even more important,
that's
right?
That can get you.
All right, Brent Wilsey's our guest, registered investment advisor. WilseyAssetManagement.com. We are live on U2 America. It's Biz Brew. On U2 America. Good to have you along tonight for a Thursday. Rusty Nail's out of the studio. I'm glad because my friend Brent Wilsey, who's a registered investment advisor and WilseyAssetManagement.com and one of the smartest guys in investing that I know. We've known each other for, 20 years almost, since we started in radio a long time ago.
KCEO days.
Yeah, KCEO is when we first met each other. And Brent, though, is one of those asset managers that you don't need $1 million. Yeah, what is your minimum when you want to take somebody on, when you take somebody on for investment advice?
Our minimum is like $25,000. Okay. Because of the way we manage money, we're not going to call you every day and so forth. We take on money just like a mutual fund, and we manage it for you. We do it the right way.
Now, do people deposit money every week, every month? I mean, how do people make it? However they want to.
Yeah, we have people that deposit $1,000 a month. Some do $5,000. What do they want to do? And they say, well, we're not going to invest it right away because we look at the cash, and if there's something to buy, we'll buy it. Mm-hmm. But it's about how we do 2, 3, 4, 5 years down the road. So investing is a process, not like, gee, what happened tomorrow?
Right, exactly right. Talk about Instagram. Instagram was, did you hear about Instagram?
Yeah, I mean, that was amazing, and it got me worried because my girlfriend is rather attractive, puts these pictures on Facebook and so forth.
Careful.
Exactly.
Rusty Nails might pick them up. That's the danger.
Well, people don't realize, I didn't realize this either, that this artist actually took them, changed or put a caption on the bottom, and was selling these for $90,000 at an auction. So those pictures, once they're on Instagram or Facebook or whatever it may be in the public domain, they're for sale. And I found this out a little bit before because my Lamborghini that I had, I was upset that this model took a picture with it and was selling it. And I said, hey, that's my car. And they go, on the street, public domain.
Wow, that's it.
Yeah, so you got to be careful what you put out there because, and the copyright laws protect that as long as there's some change made to that picture.
Is Instagram public yet, by the way?
Instagram is held by Facebook.
Oh, it's held by Facebook?
Yes.
Talk to us about IPOs. Would you just give me your 30-second version of IPOs? Because I remember one time you told me 20 years ago, and I use this all the time in the air, if you're ever offered IPO stock, turn and run because you're not rich enough to be offered IPO stock, right?
Exactly.
Explain what that means.
Well, that means, you just don't know. And there's been some great IPOs. And there's a couple of problems with them. One is that you don't know what you're buying for sure. Right. And I think it's so funny the media says, oh, this IPO came out and it's up 50%. Right. Well, that is from the price that a few people that were in the know kind of got it from the brokerage firm or whatever.
Yeah, right.
But the average person gets in at 50, 52. The stock closed down $5, they lose money, but they say, oh, the stock was up 30, 40%.
Yeah, right.
They're very risky. And there's been some very good ones, but
Well, the
I
idea
think
too is, the IPOs are only offered to the highest net worth individuals at a brokerage firm anyway.
right.
So,
or the insiders or the people that come from. Yeah,
if the deal isn't fully subscribed and it trickles down to the lower tier investors, probably not a good deal.
Not a good deal, right.
Hey, real quick before you get out of here, economic news, pending home sales are looking good, jobless claims not so good, but we had a good number last week. Any of this stuff weighing on the market right now?
Not too much. I mean, we had some good pending home sales. I mean, they were up 3.4%, 14% year over year, which is very, very good. So that's a positive for the economy. It seems consumers are kind of shifting from buying small items to cars and to homes and so forth. I don't know how we're doing time-wise, but we do want to go back to the debt issue. That's very important.
Let's talk about the debt issue. What's going on with that?
Well, the debt issue. We're talking about Verizon.
When we look at a company and we look at a spreadsheet, I never cared about debt until I met you. And Brett's going to tell us why we care about debt, because it's not just about the water going in the bathtub, it's about the holes in the bottom of the bathtub.
Right.
Okay.
And so we're talking about Verizon, and oh, so great about it and so forth. Well, their debt is now $113 billion, more than double in 4 years. Wow. You have to look at this. You can't just keep piling on your debt. I mean, that's 13 times their equity. So I tell people, if you have a home worth $100,000, it's like owing $1.3 million on that home. Right. It is just not going to be feasible for them. And I predict this
it can't go on forever.
Exactly.
Right? I mean, isn't that the idea?
That's the idea, exactly, because you got to make interest payments and principal payments. Yeah. And it's when your debt keeps going up and up, and they're going to borrow more to buy AOL, they're just not getting out of this. And people say, well, but that's Verizon, it's so big. Well, I was on CNBC about 2 years before they went bankrupt, and I got the same thing. Well, Brent, that's General Motors. Everybody knows General Motors. I said, it doesn't matter. When you have their debt equity was 600%, you can't keep piling on debt. You eventually want to be paid as the holder of that bond.
Right. Yeah.
And so I think in 2 3 years.
So when does the shoe drop for a company like Verizon? Do you have any idea? I mean, is there like a tipping point that you look for as a money manager where you're going to say, hey, look, now's the time. The time has come. We're out of this thing. I mean,
and I would never buy Verizon with this type of debt. I mean, if I say debt to equity of 100%, I get a little bit nervous. And here we're talking, 1,300%.
Right.
So what I think is going to happen is that there's a lot of competition. I mean, T-Mobile is really saying, hey, Verizon customers, come to us. We'll pay your service charge and so forth. Right. No fees. I think they have a great product. And it's becoming to where they're going to start losing business. So they have to lower their cost. And then there's going to be something that's going to happen in the business where all of a sudden they're going to go to the losing side. And that's going to be the start of the decline and eventually bankruptcy. So if you think about this and you think in terms of what we should be looking at in investing, individual stocks are probably not the way to go. We need to be looking at exchange-traded funds. We need to be looking at mutual funds. But even more importantly, we've got to hire a money manager. Exactly.
Right? Because isn't that really what it comes down to? Because let you look. I don't want to let you look at the individual stocks, not me.
And I would tell you, there's a lot of good money managers out there, but I think there's more bad ones out there that you got to be careful because they're going to sell your product and so forth. You've got to look at your buying small pieces of large businesses and be patient. And again, why buy a Verizon with 1,300% debt to equity?
Right.
When you buy this company I'm talking about probably next week, no debt in the balance sheet, growing earnings, growing sales, a lot of cash. Right. Gosh, buy that company.
Last of all, I do want to talk about. Do you look at the metrics in economic data each week? I mean, you look at pending home sales, you look at jobless claims. You look
every day.
Tell me why that's important.
It's important because you've got to know the overall room that you're playing in, so to speak. Okay. You want to know, are consumers buying? How do consumers feel? Because if consumers feel pessimistic, they're not buying. Well, then you're going to be selling less cars. You're going to be selling less, phones and so forth. So I want to know how the economy is doing because. And again, with home sales, pending home sales up 14%, that's very big because that means people want to buy a home. When you buy a home, what happens? Well, gee, let's replace the curtains. Let's put up, shutters. Let's, put new flooring in. So there's so many factors. You have to understand the whole game, and then that filters down to, okay, now we understand the game. This is a good time to buy. Let's look at the company. Do we have a good company that we can buy and get a good value for it?
So, I want to invite you to go to wilseyassetmanagement.com because I've known Brent for a long time, and I can tell you, if this is not, let him do the thinking on this. This is not it's not time prohibitive, it's not cost prohibitive, and as far as people's heads are swelling with all these numbers of PE ratios and debt balance, they don't have to worry about that. That's part of what you do, correct?
Right. They can understand it, but not have to do it because it does take a lot of time. There's a lot of reading goes on with it, and I want people to understand conceptually about it, but they don't need to actually do it and understand the details because it's a full-time job.
Very good, Brent. Thank you so much. I appreciate you being so generous with your time. Brent Wilsey. WilseyAssetManagement.com.